Debt is a superpower's kryptonite. It seems so from the looks of it, because both the US and China are struggling with the same issue. The US seems to have narrowly avoided a crisis, but China is not out of the woods yet. Let's start with America. The US Congress has finally passed the debt ceiling bill. The House passed it earlier this week, and on Thursday, the Senate passed it. 63 senators voted in support, while 36 opposed. The rest is up to Joe Biden. Once he signs the bill, it becomes law. It will officially suspend America's debt ceiling until January 2025, meaning after the next presidential election. Now, experts say the US dodged a bullet because they have never defaulted in their history. So it's impossible to predict what would have happened. Chances are total chaos. That doomsday scenario has for now been averted. The US Treasury can now issue bonds and raise funds. All in all, good news. Now let's turn to China. They're facing a debt crisis on two fronts. One is external lending. Xi Jinping's Belt and Road project loans are reportedly soaring. And second is local government debt. Let's focus on external lending first. The Rhodium Group has analyzed China's BRI debt since the pandemic. Here's what they found. From 2017 to 2019, China renegotiated loans worth $17 billion. If you think that's a lot, think again, because in the next 3 years, they renegotiated loans worth $76.8 billion, a sum total of 3 years. That's 2020, 21, and 2022. The reasons are obvious. The COVID-19 pandemic led to economic ruin. That was followed by higher inflation due to the Ukraine war. So many BRI countries could not repay, and the result, China had to renegotiate the loans. In some cases, even write it off completely. As a matter of fact, 2020 seems to have been the worst year, because China renegotiated loans worth $48 billion. What do these numbers say? That Xi Jinping's grand plan is failing. He spent billions to gain influence around the world, but he's ended up bankrupting the global south. And here's the catch. The blowback won't be limited to the borrowers alone. China too will feel the heat. On paper, they have the biggest pile of foreign exchange reserves, close to $3.2 trillion in April. But a good chunk of that is tied up in loans. Plus, the recent trade data is worrisome. If you want to build your forex, you need to export more. You sell more, you get dollars in return. And that's not happening. China's exports grew at almost 15% in March, but that pace came down to 8.5% in April. The result, China's corporate and retail banks saw net outflows in the last quarter. They bled foreign exchange. Where does that leave the BRI? In a lot of trouble. If China doesn't have enough capital at home, how can they lend abroad? The numbers reflect this problem. By 2019, China was lending $100 billion every year under the BRI. Now, between 60 and 70 billions. So the project has certainly lost momentum. It's also lost participants. Italy was the only G7 member in the Belt and Road. But the new government is having a rethink. Their agreement with China expires in 2024. Reports say it won't be renewed. So that's the external debt problem. Now the internal one. The same group, Rhodium, has done a study, and here's what they found. Half of China's cities have trouble servicing their debt. Now, debt service is pretty simple. It covers payments you have to make on loans, like interest payments. Half of China's cities are finding it hard to do that. The debt service cost is more than 10% of their income. Let me simplify that for you. Assume your income is $100, but you also have a loan. Every month, you must pay $10 as interest. So what's your debt service cost? $10 out of 100, which is 10%. Experts say that's too high for local governments. But the question is, how did this happen? Chinese cities have seen lower income for two reasons. One is the pandemic restrictions. Zero COVID was a nightmare for China's economy. The second was the property crisis. Remember the whole Evergrande fiasco? That led to lower tax and land sale revenue. So China has two options now. It can either generate more revenue to service the debt, or it must restructure. The first one will be hard to do. China's investment and manufacturing data is not encouraging. Their pre-pandemic GDP growth was around 7% and now just around 5%. No GDP growth, no income. And no income means no debt payments. That's the trouble for China. Their lending was pinned on the idea of never-ending prosperity. Xi Jinping could not conceive of a slowdown in China, but that's exactly what's happened. And he's now facing a ticking debt bomb.